Hi, today I'm going to show you how to pay your home off faster and build equity at the same time. There are calculators from a particular website that I want to share with you, just like I did on TikTok. I got over 22,000 views on how to do this. It was very short, and some people wanted a longer um, explanation as to how to do this. So today I'm going to be sharing with you how you can build equity faster and at the same time pay your home off. Let me share my screen with you so we can go to the site that I'm talking about. Let me give that a second to come up. And hopefully you can see my screen. We're going to go to a website called bankrates.com. Now, once you get to this website, they have several calculators. The one we're interested in, or the two, we want to go under mortgages. And if you come down and look at these two calculators, you'll see mortgage and amortization. We're going to first go to mortgage. Now, when you get your home loan, they give you a small amortization, amortized over 5 years, but I want to show you the whole 30-year picture and then how to shorten that because most people don't pay attention to the amortization schedule and they don't know that that's the key to saving a lot of money in interest that you give to the bank and also building equity faster and paying the mortgage off a lot faster. So with that being said, we're on the mortgage calculator. A couple of things before we start. We're only going to be talking about principal and interest. We're not going to be looking at the property tax. We're not going to be looking at the homeowner's insurance. We're not going to be looking at PMI or HOA fees. These are four variables that will change. I have no control over those variables, and depending on which community you live in, the property you select, the taxes are going to be different from community to community. The homeowner's insurance is going to be different. Whether you choose a PMI, I'm sorry, whether you choose a conventional loan or an FHA loan, the mortgage insurance is going to be different. Maybe MIP for FHA and PMI for conventional. So don't know which loan you have or you will be choosing. And then of course, HOA fees will be different. You may be in a community where the HOA fees are $1,200 a year or $900. So we're not going to deal with those four variables because they constantly change. We're going to stick with what's going to be fixed throughout the life of the loan, and that is your principal and interest. And then if you want to just calculate interest, all you do is take the loan amount, multiply it by the interest rate, divide it by 12, and that would tell you monthly what the interest is that you're paying on that loan. And I'll demonstrate that to you here in a minute. So in the TikTok video, I gave an example using $400,000 for the loan amount. But before I do that, let's just do a quick example using 50,000. And we're going to put 5% down. I'm using smaller numbers so you can see it a lot faster. So we're going to do 5% down, still amortized over 30 years. And we're going to say the interest rate is 5%. I'm just making this up. So if we did something, let me update that. At 50,000, 5% down, it's going to basically say that your principal and interest is 200. Let me get rid of that because we're doing zero. 200, they rounded up, and $55 a month, right? That's what the mortgage payment would be with principal and interest only. Now, if we look at the amortization schedule for something like that, it's saying that you're going to borrow $47,500, and the total interest, if you kept it at 30 years, would be 44,000. So together, it'd be $91,797 just to borrow that $50,000. Now, what if you had an extra, say, $200 a month you wanted to pay towards that? See how that interest dropped down to $14,972 with just $200 extra payment? And then also you went from paying it back in the year 2054 to the year 2036. This is the rest of the amortization chart down here. So let's say you had an extra, let's just throw $500 in there. So if you had an extra $500 that you can pay, look at that interest. You took away all that interest that was here before and knocked it down to $7,700. Now look at how quickly you'll be paying that off. See that? 1, 2, 3, 4, 5, 6, 7 years versus 30 years by making an extra $500 a month payment. So now let's do it on a larger scale. So in the example I gave on TikTok, I did $400,000, right? I said we were putting down 5%, amortized over 30 years, and of course, a 5% interest rate. Let's calculate that. So let me make sure I got those numbers right. Let me go back here. Yes, that looks like what I had before. Okay, so in this example, again, we're just going to deal with principal and interest. Our monthly mortgage, or the monthly payment for just principal and interest is $2,000 and around $40, right? So now let's look at the amortization for this. It's saying principal is $457 and your interest you're paying is $1,583. So if you're borrowing $380,000, you're paying $354,000 back to the bank if you made the same payments of that $2,040 for 30 years. But what if you had an extra? Because I was playing with this. What if you wanted to pay this off faster? Let's start big. Right now, it's saying your payoff date is the year 2054. If you scroll down on the same website, you'll see all the years, every year, how much you're paying in interest. It just adds up until you get down to the last payment. $354,371 in interest. Plus, you would have paid the loan back to the bank. So you're going to add both of those together, and you paying back a total of $734,372 $2. $734,372. So I put in here, what if just for grants, I put in there $5,000 for a couple of years that you can pay. Look at that. You took that interest all the way from the bank, which they don't want you to do, right? And now the payment, you pay this mortgage off in 1, 2, 3, 4, 5, and what, about 6 years, you'll pay that mortgage off. I'm just trying to show you the power of this thing. Because before, if we take that out and you're at paying interest of $354,000, let's say you only had an extra, I don't know, right now, look at the total interest. I'm gonna put $100 in there and I want you to look at that. Let's say you only had an extra $100. Just paying an extra $100 a month in addition to your mortgage payment, it drops it down from that 343. Isn't that amazing? Was it 343? Actually, no, it was 354. So just by paying an extra $100, you went from 354,000 in interest down to 313. What if that number was an extra 200? Let's put that in there. Now look, 281. Then you dropped your years down from the year 2054 to 2049. Then I put, what if you had an extra $1,500? $1,500. 1500. Look at that. Look at that number. Look at how greatly you reduce that interest. And this is the stuff that the banks don't want you to know. But guess what? All this extra money goes into the equity of your home. So this is money that's yours. It's tied up in your home. That's the downside is you're not earning any interest on it. But the bank is earning money as long as you have to pay them interest back. But your money is tied up. So if for whatever reason you end up with bad credit and you're hard and up for some money and you need to access your funds, you won't be able to get your money because, of course, you have to take out a loan against your own equity and you have to qualify to get your own money by having a good credit score. So this can be a pro and it could be a con. It can be a pro because you're taking away a lot of interest from the bank and keeping it into your pocket. And it can be a con if you really need this money. And then the other downside is if you already have a low interest rate, you might as well take that big chunk of money and invest it someplace that's paying you 6, 8, 10 percent or higher in interest. And if that's something you're interested in the future, then I can share with you how you can do that. But for now, I just wanted you to see how to use this mortgage amortization calculator to see if you were to add extra money towards your monthly payment, how fast can you pay that mortgage down? And let me do a couple of more examples. Let's say, I don't know, you had an extra, say, let's say $400. But remember, we're looking at $354,000 in interest that you'll be paying. But just by paying an extra $400 a month, now you've dropped it down to $234. If you did an extra $2,500 because you had some kind of side hustle and you wanted to pay $2,500, look at that. Just by, man, now you dropped it down to $88,000. And now look how long it's taking you to pay that mortgage off. 1, 2, 3, 4, 5, 6, 7, 8, 9, in about 10 years. Just by making an extra $2,500 a month, you can pay that huge mortgage off within 10 years. So that's what I wanted to share with you today. Remember to go to bankrate.com. You can look at the different mortgage, the different calculators on this page. When you click on, see that blue bar? You want it to be over here when you're looking at the mortgage payments. It's going to show you, just put 0 in these boxes. Click that down arrow for these other filters to make sure those are all zeroed out. And then you can play with the numbers in terms of how quick it would take you to pay your own mortgage off. Just make sure that bar goes over there. And then it says additional amount to monthly payment. This is where I was playing with those numbers, putting in that 100 or that 300, and it's showing you how you save on interest. Because remember, these two numbers added together would be the grand total you end up paying back to the bank. And then this is your payoff. You're going to start out at 30 years from where you are today if it's a new mortgage, or if you have an existing mortgage, you can still plug these numbers in to find out how soon you can pay it off. And then always remember, anytime you refinance, if you've had that loan for 10 or 15 years already, they're just going to reset that whole date, and then you're going to be paying a smaller amount towards principal. It's kind of like starting all over again, versus if you've already paid into it all those years, you might as well just pay extra on top of that, which will accelerate you to paying it off a lot faster if you can do that. So that's all I have for you today. Keep watching the videos. I'll be doing more on how to save you money and how to what the different mortgages are, because a lot of times people don't understand the difference between FHA, conventional, USDA, and VA. So thanks for watching, and until next time.